Hi, my name is Jihan Nabila Arisha, and I will be talking about uses of accounting data for internal users and external users. But now let's take a look at internal users. Now, for management, it is to guide them in planning, organizing, directing, and controlling the organization and analyzing the operations of the operation. For employees, it is to know about the business sustainability for their steady employment and even earning capacity. Now, we'll move on to the next slide, which is external users. Now, let's take a look at external users. So, for the first point, which is investors, it is for them to value performance and potential return. Investors, both current and potential, use accounting data to assess whether the company is profitable and growing. Now, they analyze revenue, expenses, net income, and equity to decide if they should buy, hold, or sell shares. Next, creditors. Now, these are people or banks that lend money to businesses. Now, you might be wondering why they use accounting data. It is for them to check if the business can pay back what it owes and if it is safe to give them a loan. Next point, suppliers. Now, it is for them to determine reliability in payment. Now, suppliers review accounting info to see if the company has a healthy financial position before extending trade credit or longer payment terms. Now, if the company looks financially unstable, suppliers may demand upfront payment. For the customer point, it is to evaluate long term viability. Now, big customers, especially in B2B, wants assurance that a company can continue supplying products or services over time. If the suppliers look financially shaky, they might look for alternatives to avoid disruption. That is all from my part. I'll pass it on to the next presenter. Thank you.
Next, we move to tax authorities. These are government departments like LHDN in Malaysia that collect taxes. They use accounting data to make sure the business is paying the right amount of tax and following the rules. Next, regulatory authorities. These are government agencies that make sure business follow the laws and rules. For example, Bank Negara Malaysia for finance and Bursa Malaysia for listed companies. They also use accounting data is to check if the business being honest, fair, and not hiding anything. Last, they use the data to protect the public, avoid fraud, and make sure the company following legal.
A sole proprietorship is a business owned and operated by one person and commonly used for small businesses like food stalls and online businesses. First of all, capital contribution is financed using the owner's personal saving and loan, and size of capital usually small compared to partnership and companies, and the owner may struggle due to limited funds. Second is liability. As sole proprietorship has unlimited liability, which the owner personally responsible for business debt. That means if the business fails and assets are not enough to cover losses, the owner personal assets like house and car can be used to pay the debt. Next is legal requirement and main legislation, which sole proprietorship must follow certain legal requirement based on its business location. For example, for fixed place business like shops and offices must register with registration of business ROB, and the owner must get a business license from the district or state council. And for no fixed place business like food stalls, it doesn't need to register with ROB, but the owner requires a license from the local authority, which is municipal council. The fourth one is taxation. A sole proprietorship is not taxed as a business entity. Instead, the owner pays tax based on their individual income tax rate, which means business profit is not taxed separately, and the owner pays personal income tax, which is lower than corporate tax. Lastly is financial statement. Unlike companies, a sole proprietorship does not need to publish financial statements to the public. Usually, financial records are for tax and decision making purposes, and it is no requirement to audit financial statements. However, proper bookkeeping is needed for tax reporting.
Hello, I'm Nick, and I will continue with our presentation on partnership business. To start off, capital contribution play a crucial role in determining the business funding and the partner's equity ownership. Cash contributions are the most common, where partners contribute money to support the business operation. Partners can also contribute properties such as real estate or equipment for the business operation. In some cases, service contribution may be allowed, and these are usually found in professional partnership such as law or accounting firms. The contributions made by the partners directly impact their equity ownership in the business, with larger contributions generally leading to a higher percentage of ownership and a larger share of profits and loss. One of the key differences between a partnership and a sole proprietorship is the size of the capital. The capital is generally larger due to multiple contributors. Unlike sole proprietorship, where only one individual provides capital, partnership allow multiple partners to contribute and share the risks and responsibilities of running the business, making them more willing to invest large amount of capital. This results in the partnership being able to handle bigger projects and grow faster compared to a sole proprietorship. Moving on to liability, in a partnership there is unlimited liability. This means that the partners are personally responsible for all the business debt and loss. If the business face debt or face legal claims, the partner's personal assets can be used to cover those liabilities. Moreover, let's look at the legal requirements and main legislation for partnership. When forming a partnership, there are several steps that you need to take, such as partnership agreement. This document outlines each partner's overall framework for how the business will operate. As for the business registration in most jurisdictions, the partnership must be officially registered with the relevant authority, such as the Registrar of Business. Next, taxation. Partnerships are typically structured as pass-through taxation. This means the partnership itself is not taxed directly. Instead, the income, profits, or loss pass through to the individual partners. Partners also pay taxes based on their personal income tax rates and are subject to self-employment taxes. Additionally, partners can also deduct business expenses like operational costs from their taxable income. Even though the partnership itself doesn't face direct taxation, certain jurisdictions may impose special tax rules on professional partnership. Finally, in terms of financial statement, these are typically prepared for internal purpose in a partnership to monitor the business performance. Partnerships are not required to publicly disclose their financial statements, but they should still prepare income statements, balance sheet, and also cash flow statements to help partners track the flow of money in and out of the business. These financial statements are crucial for internal decision making, taxation, and ensuring transparency and accountability among partners. And that's all from me. And I'll pass the slide to the next presenter. Thank you.
Public limited company. First, capital contribution. Capital contribution is when public limited company receive the capital contribution by selling of shares. So basically, the shares are listed in the share market, which can be traded on the Malaysian Stock Exchange and free to be transferred to anyone. Second, liability. The liability will be limited according to capital contribution. So that means investor and even owners' private assets are not at risk if the company fails. Furthermore, legal requirement and main legislation. It must be registered with Suruhanjaya Syarikat Malaysia SSM that is required by the Companies Act 2016, and also should put public limited or BHD, which is Berhad, at the end of the company's name. For example, CIMB Bank Berhad. And then taxation. So if the company receives a profit, it will be taxable and the company needs to pay for it. Talking about the taxation, basically the payment of tax is according to corporate tax rate, that is 24% of the net profit for the year of 2022. The last one is financial statement. The financial statement must be announced to public every year through newspaper, and they can't hide it. Besides, it should be outdated, and the copies will send straight to the Suruhanjaya Syarikat Malaysia SSM.
Lastly, private limited company. First, capital contribution. Capital contribution by selling of shares, and shares are sold to a certain group of people only and not open to public. which is not listed in the share market. Second, liability. Private limited company is limited liability and only according to capital contribution. Third, legal requirement and main legislation. It must be registered with SSM, which is Suruhanjaya Syarikat, Malaysia, as required by the Companies Act 2016, and should put private limited Sendirian Berhad. Taxation. Company's profits is taxable. Payment of tax is according to corporate tax rate that is 24% of the net profit for the years. Last, financial statement. The financial statements are not announced to the public, but the financial statement should be audited and the copies should send to SSM.